month of June so far for the entire power sector space. All the stocks are buzzing away in trade. Of course, there are several triggers, developments and stories playing out as well, which are shaking things up for the sector, which is typically away from the limelight. Of course, talking about these triggers, one of the big developments to watch out for is Tata Power Renewables business for $70 million worth of IPO, which the street is keenly watching out for. They're awaiting more details on that. Apart from that, there's a rise in power consumption with the gradual unlocking, commissioning of renewable power projects as well, something to watch out for as far as the entire power space is concerned. And finally, you also have takeover of Odisha DISCOMs as well, which is putting a fair amount of traction or rather thrust on this sector. And finally, lower interest costs as well playing out, which too could be adding to the optimism.
From state-run giants to private sector players, the entire basket of power sector stocks has been abuzz. In the first 8 sessions of June itself, JSW Energy has rallied 25%. Tata Power has gained close to 20%, CESC is up 14%, and even the likes of NTPC, Power Grid, Adani Transmission and Torrent Power has risen in high single digits. So what's aiding this up move? As unlocking resumes in different parts of the country, power consumption has seen a rise. Reports suggest in the first week of June, power consumption was up around 12% with a strong rebound in industrial and commercial power demand. Outstanding dues from DISCOMs have reduced due to liquidity infusion in REC and PFC. There's also been a sharp improvement in PLF trends from low 50% to around 65% in coal generation, which also seems to be driving the momentum. The street awaits Tata Power Renewable Energy's IPO details. Experts believe the IPO is likely to get better valuations than InvIT. Meanwhile, Axis Capital in a note said that the company has a credible roadmap to grow profits 3x to 3,000 crores over FY 21 to 25. Its solar EPC order book is strong, incremental business growth is being driven by renewables and T&D, and Tata Power also has a well-laid-out plan for its ESG goals.
Along with the positives, analysts have also flagged off a list of key risks to watch out for. Of course, the plan to monetize stake in the renewables business continues to drag on, so that is something that you need to keep on in your mind. Slippage versus plan on solar EPC across utility scale projects, solar rooftop and pumps, another factor to keep on your mind. And lastly, there is some cautiousness about the near-term profitability in the solar EPC business. So there could be some weakness as well. So that is something to also keep on your radar. But for now, it looks like the market is focusing more on all the positives rather than risks and weaknesses, as you can see, as it is already reflected in the way the power stocks have surged in the last 10 days of this month.